Hi and welcome. I'm Rebecca Collins, Research Manager for MLC, and today I'm joined by MLC's Chief Investment Officer, Jonathan Armitage. Thanks for your time today, Johnny.
My pleasure.
So Johnny, a lot's been happening since we last spoke. Australian interest rates are at record lows, there's the US-China trade war, Italian government, German economy, Boris Johnson. How's MLC managing all of this for our clients?
Well, Rebecca, you're absolutely right. There's no shortage of challenges facing investors at the moment. I think it's important to sort of separate out what really impacts markets from other sort of global events. So the things that we're sort of focused on is that we continue to see an ultra low interest rate environment. You've talked about interest rates here in Australia reaching an all-time low. If you look at bond markets around the world, we now have over 18 trillion US dollars of mostly government bonds producing a negative interest rate. And that's obviously impacting the way that investors look at future returns. It's a pretty challenging period, particularly if we sort of look forward as to the returns that you're likely to see out of markets going forward. We've been through a period of very strong returns for investment portfolios. But as we sort of sit here today, and particularly with that focus on the returns that you get out of fixed income instruments, our expectations are that returns are going to be lower than they have been over the last 4 or 5 years going forward. But as you said, because there's no sort of shortage of areas for markets to focus on, what those returns look like is actually sort of perhaps more challenging to predict right now than it has been for some time. I think our focus from an investment perspective is to work out what is important for future investment returns and try to filter out some of the elements that are perhaps less important. To give a couple of examples of the ones that you mentioned, it's quite clear that what goes on in global bond markets and particularly US Treasuries is probably more important to future investment returns than, if I can use the word, the pantomime that's going on in UK politics. How do we sort of think that about that from an investment perspective? I think the things that have been sort of an important part of the way that we look at investments at MLC for the last 35 years remain very much in place, that we are looking for diversification. We are looking to make sure that we're managing the risk as well as the return components when we look at our investment portfolios, and ensuring that the components that we have in our clients' investment funds provide a greater degree of stability for returns going forward.
Thanks, Johnny. And with negative yields and equity markets looking quite expensive, are there other areas where investors can look to generate some returns going forward?
If you look at the way that we have been shifting our portfolios, sort of focus has been away from some of the more traditional investment areas like sort of pure equities and fixed income, and into other areas of alternatives. That includes things like private equity and a component that we have that sits within most of our investment portfolios called the low correlation strategy. That's sort of focus on trying to find diversifying investment capabilities which do well when you see both equities and also fixed income returns becoming more volatile. And so that's been the sort of focus that we've had really for the last sort of 18 months or so. You will continue to see us selectively adding to those capabilities going forward.
So there are opportunities in the market, just not in your traditional asset classes?
Absolutely, and that's that's a sort of key focus of our investment team and the expertise that they bring to bear. There's a huge amount of due diligence that we need to do around those investment components, but we're very sure that that's an area that we have a real competitive edge in, some very significant investment capabilities and expertise, and we think that as we move into what we expect to be perhaps a more challenging investment environment over the next couple of years, that those investment components will be important to client returns going forward, and also an important point of differentiation.
So diversification is still essential in a portfolio?
Absolutely, as it always has been.
Excellent. Thanks for your time today, Johnny, and thank you for joining us.